Good evening. Thanks very much for joining us on India Business Hour. I'm Shireen Bhan. The top stories that we're tracking for you this evening. Wall Street wobbles after a sharp fall in Nvidia shares. Trump administration bans the sale of a semiconductor chip that the company specially designs for China. Asian and European markets trade largely lower. Gold prices touch a record high as more and more investors shift towards the safe haven buying. 10 grams of 24-carat gold costs around 95,000 rupees in India. China's Q1 GDP growth beats estimates at 5.4% amidst tariff worries. US President Donald Trump says the ball is in China's court to make a trade deal. China warns of grave consequences to the world economy, accuses the US of bullying. Steel Secretary Sandeep Pondrake does not expect imports to surge due to tariff wars. He's hopeful of a decision on safeguard duties. Also adds there is no plan to merge state-owned steel makers. That's another exclusive. Andhra Pradesh Cabinet Minister Nara Lokesh clarifies that the over 21 acres of land in Vizag has been sold to TCS for 99 paise and not leased out. Says he believes the company will be a catalyst for the state's IT growth. Adds Andhra's soon-to-be amended IT policy will have a precondition for companies. They would have to generate at least 500 jobs for every acre of subsidized land allocated. Wipro misses estimates in Q4 revenue declines nearly 1% on a constant currency basis. Growth outlook remains weak as the company expects revenue to drop by as much as 3.5% in the next quarter. Volatile market conditions lead to a slowdown in the IPO market. 144 companies put public issues worth nearly 1.5 lakh crore rupees on hold. Only 10 companies have gone public in 2025 so far. IndusInd Bank is likely to see the exit of 3 senior executives, including the CEO and his deputy, over delayed reporting of discrepancies in derivatives accounting. The stock rallies in trade after the bank discloses the negative impact of 1,979 crore rupees, which is lower than the earlier estimate. An apartment worth 50 crores in Gurugram, a golf set worth 26 lakhs, credit card bills worth 33 lakhs. Secy unearths how Gensol promoters Anmol Jaggi and Puneet Jaggi diverted funds allegedly for their personal use. Gensol shares remain under pressure, hitting the lower circuit in trade again. Supreme Court grills the government on the new Waqf Amendment Bill and proposes to stay portions of the new legislation, expresses concerns over violence due to the new law. The government defends the bill, calling it more inclusive. A major showdown over sunscreen ads. Hindustan Unilever spars with Mama Earth's parent Honasa consumer over advertisements touting SPF efficacy. Well, we've got a packed show lined up for you, but let's start with the global markets, where investors continue to tread with caution. Shares on Wall Street are wobbling at opening bell after a sharp fall in Nvidia. The chip maker is staring at a $5 billion hit, and that's because the Trump administration has barred Nvidia from selling artificial intelligence chips called the H20 in China. Now, these chips were designed especially for the Chinese market to comply with export controls and would require a special license. China has also reported a first quarter GDP growth of 5.4%. Now, this is higher than estimates of 5.1%. Remember, China has been stimulating its economy since September of last year to lift consumer sentiment. Now, global investment banks have recently cut their forecast for China's GDP growth for the year, with the Chinese government has pegged at 5%. Shares in China closed mildly in the green after that Q1 GDP print. No such luck, though, in Japan, South Korea and Hong Kong, where shares ended in the red. The Nikkei down 340 points. The Kospi and the Hang Seng also closing lower. Back home, the Sensex and the Nifty gained for the third day. The Sensex gaining over 300 points, the Nifty 100 points. Mid-caps did fare better today. Bank stocks led a rate rally with the Nifty Bank Index higher by almost 700 points. It's 1.5% of a gain there for the Nifty Bank. And let's shift focus now to commodities. Lots happening there as well. Gold prices touching a record high as more investors shift towards safe haven buying. The yellow metal has crossed the $3,300 an ounce mark for the first time. In the domestic market, 10 grams of 24-carat gold will cost you 95,000 rupees. In the last 4 months, gold prices have surged 25%. Manisha is standing by with more on the gold rally that we are witnessing. Manisha.
It's bulls in absolute control when it comes to gold prices, and we've seen a one-way rally since the time this year has started, and we've seen an all-time high above $3,300 an ounce. Now, for the Indian markets, the prices have crossed above 95,000 rupees per 10 grams. We are just 5,000 rupees away from a lakh rupees per 10 grams of a price on exchanges there. So very, very strong, heady momentum on the higher side in case of gold there. We are up by 26% in this year for gold prices, and this is above 28% of gains that we saw in the previous year as well. Well, the chart that comes up on your screen tells you on how we have been in the past many years. I've taken month of April as on the higher side here. So when you look at the last year until now, the last 12 months, the $1,000 per ounce of a rally that we've seen in prices has perhaps been the fastest gain that gold prices have ever seen in any year. So this has been a very, very strong gain. We are nearly 40% on the higher side till time here, and the markets are anticipating higher highs from here. The reason for that is because you still have a lot of uncertainty in the global markets. The tariff concerns, tariff can lead to recession concerns. We also are looking at very strong buying in the Indian and the international markets when it comes to investment in gold. The physical jewelry demand, of course, has gone down a bit. Also, when you look at from 2000 to 2025, the 25 years that is, the gold prices only have given you 2 years of negative return. The rest of the years, gold has rewarded you well. Apart from that, the US debt, the world debt on the higher side also has been supportive for gold. You also have safe haven buying on the back of geopolitical tensions. The dollar index trading below 100 now have been supportive factors as well. And the markets do believe that going forward, we are in uncharted territories, but the momentum is still on the higher side. Should you short at these levels? Maybe no. A correction should be coming? Well, yes, but not at these current levels. So when you look at various banks and brokerages, they have been upping their forecast in sense of gold. Goldman Sachs now talks about $3,700 an ounce on the higher side. Deutsche Bank also has put out 3,700 of a level. Bank of America talks about 3,350. Citi and UBS are talking about $3,500 an ounce, which is still $200 away from here, higher from here. And then, of course, you have De Beers, Swiss Asia Capital, all putting out very, very bullish cues from here. Well, the markets believe that these levels are achievable if the tariffs remain where they are. The interest rate cuts is what the street is anticipating right now. So most of the fundamentals factors are supportive. Even if US and China do sit together and negotiate on the tariffs there, markets believe that would shave off perhaps $200 to $250 an ounce from here on. But 3,000, 3,200, even in that case, seem like a strong support at this point.
Manisha, many thanks for joining us. From the gold rush to earnings corner, Wipro missing estimates in Q4. Revenue declined nearly 1% on a constant currency basis. The growth outlook remains weak as the company expects revenue to drop by as much as 3.5% in the next quarter as well. Rima standing by with the Q4 highlights. Rima.
Thanks so much for that. So I think the biggest disappointment when it comes to Wipro is their Q1 guidance, because March is done, the March quarter, right? So even if there is a revenue miss in Q4, it's in the past. Given the current macro uncertainty, what Wipro had to say about the June quarter was paramount, and the numbers are telling you that things are going to be painful. The company is guiding for -3.5% to -1.5% in Q1 in the June quarter. In fact, the company commentary also says clients remain cautious in the face of macro uncertainty. So the Q1 guidance is a miss. Also, the Q4 revenues has come in at the lower end of the company's guidance. So in Q4, revenues have fallen sequentially to -0.8%, closer to the lower end of the company's guidance. Where the company has done well is on two accounts. One is their margin defense. So despite revenues falling in the March quarter, they've held on to margins at 17.5%. So unchanged sequentially. And even for the full year, FY25, they've managed to expand their margins by 100 basis points. And secondly, the deal wins. The company's total deal wins are up 13.4% quarter on quarter, nearly approaching $4 billion. And even their large deal bookings at $1.7 billion shows an improvement of 48% on a year-on-year basis. So in those two counts, the company's done well on margins and on deal wins. But looking ahead, just purely in terms of a June quarter and the Q1 guidance, it is a bit disappointing.
Rima, many thanks. The big newsmaker of the day, Andhra Pradesh Cabinet Minister Nara Lokesh, clarifying that the over 21 acres of land in Vizag has been sold to TCS for 99 paise and not leased out. The IT bellwether would invest over 1,300 crores to build a development centre that would generate 12,000 jobs. In a conversation with me, Lokesh said that the company will be a catalyst for the state's IT growth and he's ready, and I quote, to do some deals to generate jobs. He added that the state's soon-to-be amended IT policy will have a precondition for companies. They would have to generate at least 500 jobs for every acre of subsidized land allocated. Take a look.
This is actually a sale of land at 99 paise. And this project of TCS is expected to create close to 12,000 IT jobs in Visakhapatnam, which is the IT capital in the state of Andhra Pradesh. So we're really excited to have TCS land finally in Visakhapatnam. And we're looking forward to inviting the other larger IT players also to come down and set the shop up in Visakhapatnam. We have amazing talent pool. We have great infrastructure. As a state, we're willing to give land at a very subsidized price. And I keep jokingly telling people that if go over to marry Bangalore and have a child, that would be Visakhapatnam. So we have it all. And we believe that this could be the trigger for large investments coming to Visakhapatnam.
Well, that's Nara Lokesh saying that they will move an amendment to the Andhra Pradesh IT policy, which will now reflect the kind of deal that the government has done with TCS, essentially giving them over 21 acres of land for 99 paise for committing to 1,300 crore rupees in investment and creating 12,000 jobs. China has replaced its top international trade negotiators. It deals with a dispute with the US over reciprocal tariffs, with both sides unwilling to cede ground. Li Shengang has been appointed Vice Minister of Commerce. Li has served as China's representative to the World Trade Organization. And speaking of the tariff war, President Trump has now put the ball in China's court. In a media briefing, White House Press Secretary Caroline Leavitt read out Trump's latest message to China. She said, and I quote, "China needs to deal with the US. And with us, we have to make a deal with them." End of quote. Trump said that China needs America's money. Remember, Trump put a 90-day pause on reciprocal tariffs on other countries, but targeted China with levies of 145%. Now, following Trump's comments, China warned that it's not afraid to fight a trade war with the US. Its foreign ministry spokesperson said if the US wants to resolve the issue, it should stop threatening and blackmailing and talk to China on the basis of equality and respect. Meanwhile, China's official state media criticized the US, urging it to stop whining about being a victim after having taken a free ride on the globalization train. The China Daily also said the US is not getting ripped off by anybody. And in the US, California is set to sue President Donald Trump to block the implementation of import tariffs. The state's Governor Gavin Newsom said that the unlawful tariffs are wreaking chaos on Californian businesses, families and the economy. The state also accused Trump of overstepping his authority. The lawsuit will be the largest legal challenge yet to Trump's trade policies. Union Steel Secretary Sandeep Pondrik does not expect imports to surge due to Trump's reciprocal tariffs. Speaking to CNBC TV 18, he said he was hopeful that a decision on the safeguard duties for the steel sector would be taken soon. He also said that safeguard duties were not the only tool available with the Indian government in order to protect the domestic steel industry. Take a look.
I don't expect any major import increase because of the present scenario. Also, in view of the fact that in addition to safeguard duty, we are also trying to see that misuse of licenses doesn't take place. We have got complaints that in certain cases and in certain countries, licenses are being misused by importers and exporters both. So that is under investigation, and we would try to put a stop to that kind of practices. So it's safeguard duty, I don't think, is the only way to protect the domestic industry.
That's the Steel Secretary. And staying with tariffs, India may remove the duties on ethane and liquefied petroleum gas imports from the US. As per Reuters, the final decision on the duty cuts will be taken by the Commerce and Finance Ministry. Currently, India levies import taxes of 2.5% on ethane, which is used to produce petrochemicals. As per the US Energy Information Administration, India is the second largest buyer of US ethane after China. And the US is witnessing a sharp drop in tourist arrivals since the start of this year. Trump's crackdown on immigration is sparking fear and panic among travellers, including many from India. Madiha standing by with more. Madiha.
Well, the drop in arrivals doesn't augur well for the US travel and hospitality industry. The Trump government intended to target illegal immigrants living in the US, but as per data on different platforms, their rules and policies are keeping many people away. An analysis by American news portal Axios shows a 20% year-on-year drop in the number of foreign tourist arrivals at 10 busiest airports in the US in March. According to data published by International Trade Administration, total arrivals into the US saw an 11.4% year-on-year decline. Arrivals from Mexico were down nearly 23%. From Central America, arrivals dropped 24%. From Western Europe, the decline was 17.4%. Now, if we look at arrivals through all modes of transport into the US, then Germany saw a decline of 28%, UK saw a drop of over 14%, India and China, while less dramatic, also posted drops in arrivals. A major drop is from Canada. Several Canadians dropped their travel plans to US. As per Statistics Canada, return trips by land fell by nearly 32%, and by air, the visits fell by 13.5%. So what is discouraging travelers? Few factors could be: rising global tensions, policy changes, reports of detainment or harassment at borders. Countries like Canada and China have issued travel advisories, especially for transgender travelers. Now, travel policy changes like stricter visa requirement, mandatory registration for stays over 30 days, harsher penalties for overstaying visas are deterring travelers. The rule stating that passports must reflect the holder's biological sex, recognizing only male and female under federal guidelines, is also adding to the caution. In India, travel agents say that even green card holders are hesitant to travel home, fearing scrutiny upon return. Many are deferring US trips altogether unless absolutely necessary. Foreign tourists are a big contributor to the travel and hospitality industry in the US, and the drop in numbers is painting a worrying trend.
Madhya, many thanks. And back to corporate news. IndusInd Bank is likely to see the exit of 3 senior executives, including the CEO and his deputy, over delayed reporting of discrepancies in derivatives accounting. The bank stock rallied in trade after the bank disclosed negative impact of 1,979 crore rupees. That's lower than the earlier estimate. Ritu's here with more. So, Ritu, more high-profile exits likely?
Well, a top-level shakeup could be on the cards at IndusInd Bank, with sources indicating at least 3 senior-level exits expected in the coming few months. Now, we've been given to understand that the CEO, along with the deputy CEO who is in charge of global markets, including the derivatives portfolio, are among the 3 executives that could be asked to step down because the regulator has expressed displeasure at the manner in which the entire issue was handled and the delay in disclosures. Now, while the board is already working on the CEO succession plan, we've also been given to understand that the regulator has asked the bank to submit the shortlisted candidates at least 4 to 6 months before the current CEO, Sumant Katpalia's term ends in March next year. However, in its response to our story, the bank has denied receiving any such communication and did not comment on the management changes. Now, the bank has also received the external auditor PwC's report on the derivatives portfolio, which pegs the hit at 1,979 crores, which is broadly in line with the management's estimates as well as the street expectations. And we understand also around the regulator's preliminary assessment of the hit. Now, the bank had first pegged the adverse impact at 2.35% of its December net worth, which it has now revised down to 2.27% on a post-tax basis and will reflect it in its FY25 financials. So no nasty surprises on the financial front. Brokerages like Morgan Stanley say they will closely monitor the upcoming earnings for insights into the outlook on margin, growth and asset quality. Macquarie sees this as incrementally positive in the near term, while Citi says developments around the CEO transition will be closely monitored.
Ritu, many thanks. The Enforcement Directorate conducted search operations at several locations linked to EaseMyTrip promoter Nishant Pitti. Sources tell us the searches were in connection with the Mahadev betting app money laundering case. The raids took place at 15 locations, including Delhi, Mumbai, Gurugram, Chandigarh. The case stems from an FIR alleging illegal gambling and cyber fraud worth 15,000 crore rupees linked to the Mahadev betting app. And staying with scams, shares of Gensol Engineering hitting the lower circuit in trade once again. This comes a day after the market regulator barred Gensol promoters Anmol Jaggi and Puneet Jaggi from accessing the securities market. The SEBI order revealed that promoters raised money for the company, but instead allegedly used them for personal purposes, misleading investors. Yash is standing by to take us through SEBI's allegations on the fund diversion. Yash.
Gensol Engineering availed a loan of 664 crore rupees from IREDA as well as PFC. It said that the listed company, which is Gensol Engineering, will put an additional 167 crore rupees and a total amount of 830 crore rupees will be used to purchase 6,400 electric vehicles. What happened though is that Gensol Engineering only purchased 4,704 electric vehicles and an amount of 262 crore rupees remained unaccounted. These funds were round-tripped and used by the promoters to purchase high-end properties like the Camellias by DLF Gurgaon. Another instance where about 54 crore rupees, which was raised by Gensol Engineering from IREDA, was transferred to the private entities of Gensol promoters like Go Auto, Velray Solar, Matrix Gas and Precinto Technologies. Also, about 100 crore out of the total 146 crore raised from PFC was transferred to the private entity of Gensol promoters, that is Gensol Consultant, as well as CapBridge Ventures. SEBI also alleges that the funds raised by Gensol Engineering were used by family members of the promoters Anmol and Puneet Jaggi for personal uses. What uses? 26 lakh for the purchase of a golf set, 3 lakh towards travel trip, 17 lakh rupees spent at Titan, 8 lakh towards marketing agency, 66 lakh towards purchasing foreign currency and about 33 lakh towards American Express card bills. It does not end there. There have been instances of market manipulation also. About 10 crore round trip from Gensol Engineering first into a private entity, then into promoters of that private entity, then into another private entity, and then again coming back into the preferential issue of the listed Gensol Engineering. Essentially, Gensol Engineering's money coming back into Gensol Engineering to subscribe for Gensol Engineering's preferential issue. Not the only issue of market manipulation. Velray, which was a private entity of Gensol Engineering, the promoters would trade into the scrip of Gensol Engineering very often. How often? Almost every month between 2022 to 2024, investing a total of 160 crore and taking out 178 crore rupees. Gensol Engineering also misled investors, issuing false disclosures around orders for electric cars and two-wheelers when the company's manufacturing site had no trace of any manufacturing activity. SEBI has finally passed an interim order against Gensol Engineering and its promoters Anmol and Puneet Jaggi, but it's still an interim order and we don't know how much more dirt will be unearthed as the investigation progresses and the final order is issued by market regulator SEBI.
Yash, many thanks for joining us. Up next on India Business Hour, major showdown over sunscreen ads. HUL spars with Mama Earth's parent Honasa Consumer over advertisements touting SPF. That and more when we return. Catch CNBC TV 18's news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. The volatility in the stock market has sparked a slowdown in the primary markets. More than 140 IPOs worth nearly 1.5 lakh crore rupees currently in limbo. Rachna is here with more details. Rachna, take us through the companies that are likely to be impacted.
Ashrin, multiple companies are putting their IPO plans on the back burner. The slowdown is not just on paper anymore, it's visible in the numbers. January and February saw just 16,000 crore rupees raised from 10 main board IPOs. That's a sharp 37% decline from December 2024. But in March, the IPO market came to a complete standstill. Not a single main board issue was launched, reflecting the deep freeze gripping India's primary markets. Several high-profile names have either delayed or scaled back their IPO plans, citing market conditions, valuation concerns and regulatory delays. Start with Ather Energy. As we have been reporting for weeks now that the electric two-wheeler maker had initially aimed for a 4,000 crore rupee IPO, but that number has now been revised and brought down to roughly 3,000 crore rupees. Its valuation too has taken a significant hit from the initial plan of 20,000 crore rupees, then to 14,000 and now finally to 12,800 crore rupees. That's what we're told by our sources, who also tell us that Ather's already filed 2 updates to its DRHP, pushing the timeline for the launch to the end of this month finally.
Then there's Urban Company, which is also in like wait and watch mode. The platform, which was once targeting a $2 to $3 billion valuation and hoped to raise about 3,000 crore rupees via an IPO, has now taken a 80% cut in its issue and now aims to raise just about 500 crore rupees through the IPO. The timeline, however, seems to be on track for Urban Company. Another much anticipated one is Milky Mist. The dairy major is moving forward with its IPO plans and aims to raise about 2,000 crore rupees by the end of this year, backed by a 50 crore rupee profit for FY24. The company is also working on pre-IPO funding round to shore up investor confidence amid the current volatility and ahead of their launch. But then there's LG Electronics India. The massive 15,000 crore rupee offer for sale, once expected to be one of the largest consumer IPOs in the Indian market, has now been shelved. Sources have said that the delay is due to global macroeconomic uncertainties and shifting investor sentiment, both of which have prompted the company to rethink its timing. As per sources, JSW Cement too has pushed its 4,000 crore rupee IPO to July now. Zepto has also been in the process of adding more domestic names to its cap table and so conducting pre-IPO rounds. It has also had some valuation concerns amid the volatility, but is now expected in Q3 of this year. According to sources, even Tata Capital, whose 15,000 crore rupee IPO was widely anticipated, has now decided to delay its listing plans amid the tepid market environment. So this has been that's been going around in the IPO market.
Yes, clearly impacted by what we are seeing happen in the global equity markets and in our markets as well. Shilpa, many thanks. Rachna, many thanks for joining us. A major showdown brewing in the skincare space over sunscreen ads. Hindustan Unilever sparring with Mamaearth's parent company Honasa Consumer over ads touting SPF. HUL moved the Bombay High Court against Honasa, alleging that the Lakme brand has there is a claim as far as efficacy is concerned, which is false. Shilpa joins us now with the genesis of the showdown. Shilpa.
Well, you know, an SPF war has broken out, and the latest update is that HUL has moved Bombay High Court against Honasa Consumer. HUL alleges that a recent ad by Honasa's brand Dermaco directly targets its Lakme brand, saying, and I quote, "Hey Lakme, congratulations on finally getting SPF 50 in vivo tested. Welcome to the Dermaco standard." Now, HUL is seeking a court directive to restrain Honasa from further brand disparagement. Now, this comes close on the heels of Honasa's case against HUL in the Delhi High Court over a Lakme campaign featuring an SPF lie detector. Now, Honasa alleged that the unnamed product that is shown in the ad resembles the Dermaco sunscreen and has sought the ad's takedown, calling it misleading and damaging to the brand. Now, the Delhi High Court did note that the Lakme ad appears to be disparaging in the face of it and has sought HUL's response. Now, that matter will be heard on the 17th of April. Now, you know, the larger picture here is that it's important to note India currently lacks clear regulatory framework for SPF testing. There is no watchdog verifying these product claims. HUL, on its part, maintains that Lakme has followed an in vivo SPF testing, which is considered a gold standard, and it's been doing that since 2015. And it claims that independent lab results have shown that several brands, including some of the online bestsellers, fall short of their claims of being SPF 50 and are actually just SPF 20. Now, these two legal battles, Honasa's in Delhi and HUL's in Bombay, underscore an intensifying competition in India's 2,000 crore sunscreen market, and it will be really interesting to see how this plays out. Back to you.
Shilpa, many thanks. And before we wrap, the White House has confirmed US Vice President JD Vance's visit to India. The Vice President will travel to Italy and India between the 18th of April to the 24th of April. He's scheduled to hold meetings with Prime Minister Modi and visit Jaipur and Agra, according to the White House. The visit comes amidst hectic parleys in the corridors of power over a trade deal. And with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. The news continues right here on CNBC TV 18. We're going to be back with you in a moment. Stay tuned.